Hello YouTubers, Alaska Prepper here. I watched a video a few days ago about the Great Depression, about a gentleman who wrote a journal and that journal was turned into a book. Now the video that I saw came from this channel, Neil McCoy Ward. And he compresses down the entire book into about 20-30 minutes or so. So I recommend that you guys go check it out. It's compressed into that time. But what I've decided to do I was so amazed by the information in that book that I went ahead and purchased it. So what I'm going to do is I'm going to read about 20 pages at a time, and then I'm going to do a several part series to this book so that we can break it down one part at a time instead of trying to compress the entire book into a 20-30 minute video. Now, like I said, I recommend that you get the book. I have it listed on my Amazon storefront because I think it's a great book. I'm about halfway through it right now, but I'm only going to do about 20 pages at a time or so that we can get through it and be able to actually think about what is being said instead of just reading right through the thing, right? I'm going to go ahead and break it down and point out the things within that journal back from the 30s that are very similar to the things that we are going through today. That way we can have somewhat of an idea of what we may be able to expect coming the next Great Depression. Because ladies and gentlemen, look around. If we're not already in a Great Depression, one is on its way. The name of the book, by the way, is The Great Depression, A Diary by Benjamin Roth. Alright, so like I said, highly recommend this book so far. It is very awakening to see what the similarities are to what happened then and to what is happening now. So let's go ahead and get into this. So it starts off by saying, things began to hum again in 1922. Now the gentleman who wrote this diary, Mr. Roth, he went through the First World War. So after he got back home from the First World War, he went into a business that he owned, and it was a law business. So he was a lawyer by trade. And he is starting to explain what things looked like when he got back from the war, or a few years after he got back from the war. And he goes on to say, things began to hum again in 1922. Our steel industries and other factories turned from the making of war materials to the making of automobiles, radios, etc. So consumables. We had a real estate boom, and later in 1925 there was a tremendous boom of real estate in Florida. Prohibition was in effect, but actually the amount of bootleg liquor consumed exceeded that before Prohibition. So he's saying that even with Prohibition, the amount of liquor that was being consumed during Prohibition was more than was being consumed prior to it. He goes on to say, as I look back now to the 1922 to 1929 period, it seems to me unreal and almost unbelievable. After the war pressure, people wanted to have a good time and wanted to spend money. So people were venting off and they were spending money like crazy. Just like the last 10 years, ladies and gentlemen. Look back the last 10 years. Well, we'll go over that towards the end of the video. I'm going to give you some statistics of the things that are happening now in the present so you can see how similar it is to what had happened back then. To an older man, it must have seemed inevitable that we were heading for a crash. But to most of us, it seemed that we were in a new era which would never end. Just like the last 10 years, ladies and gentlemen, the stock market is going up, the housing market is going up, people are getting into Robinhood, young investors, etc. In my own law business, I began to feel a change in 1924, but did not know what was happening until several years later. My practice dealt largely with independent merchants. In 1924, these independent merchants began to be replaced by chain stores. The A&P and Kroger grocery stores probably put over 1,000 merchants out of business. So here in this era, in his era, big stores, I would call them big box stores, I guess, right? Supermarkets of that type. They were opening up and putting smaller mom and pop shops out of business because the mom and pop shops could not compete with the volume of those large stores. Today, almost every building on Federal Street is occupied by a chain store. For many of these independent merchants, I performed one of the last writ bankruptcies and never saw them again. In a similar way, beginning in 1924, real estate and building transactions became fewer and fewer. He says that an experienced economist might have recognized all of these signs, but to most of us, it meant nothing. We believed in the new era, and we were not going to sell the U.S. short. Dictatorship, communism, and socialism might rear its head in Europe, but we were sure in those days that none of those things could come to America. He goes on to say that before the war, the average person on the streets knew nothing about stocks and bonds, but that after the war, people became what is called stock market conscious, meaning that they knew that this was a new way to invest money, and that from 1922 to 29, it seemed as though every man, woman, and child had determined to make a fortune by playing the stock market. On margin, nonetheless. For those of you that don't know what on margin is, it means that you have to put up about 20% of whatever you need to purchase the amount of stocks that you want or shares that you want, and then you would borrow the other 80%. In 1929, with the market crash, all sorts of people were into the market on margins and over their heads. You're talking about lawyers, doctors, merchants, shoe shine boys, waitresses, etc. They bought stocks on tips. They didn't know anything about the stock. They just bought them because they were going up. He goes on to say that in the summer of 1929, stocks were selling at a 20, 30, or 40 times their earnings, which means that stocks were selling much higher than what the companies actually earned in a year. Okay, so just think about that. So let's say that I had a share of a stock that when you took all of the stocks, all of the shares of that stock and added them together, they were worth $1,000, right? So if you take the cumulative amount of all of the shares of that stock and added it together, it was worth $1,000, all right? Now, let's say the company only profited $100 a year. So the price to earnings for that share or those stocks to that company's earning would be 1 to 10, because it means that that company would have to profit for 10 years in order to be able to have enough money to buy back all of its shares of that stock. I hope you guys understand that. All sense of caution was lost. Stocks were bought blindly, and good bonds earning 4 to 5% were sneered at. Imagine getting 4 to 5% nowadays, ladies and gentlemen. Even though the air was full of warnings, very few people took heed. And when the crash came in the fall of 1929, the casualties were terrific. Many of my friends with small earnings had run up stock holdings on margin as high as $50,000 to $75,000. We're talking about the 1929, 1930s, ladies and gentlemen. That was a lot of money back then. The crash wiped them all out, and in many cases left them indebted to banks and brokerage houses. And right after the crash in 1929, the initial crash, people kept coming in to buy the dip. And they were being told by the news, by the newspapers, buy the dip. But what they did not know is that the bottom had not been set yet. So the stock market just kept going down and down and down. And people kept buying the dip and kept buying the dip, and it wasn't coming up. And for those of you that maybe study a little bit of history, you would know that the stock market did not recover to its past levels, to its high levels of 1929 until about 23 to 26 years after. So it wasn't a bear market for about 20 or so years, meaning that it took that long for the market to just recover to where it was before the crash. So those that kept buying, they pretty much lost everything, unless they held on to those stocks for the next 23, 25 years, and then they would have just been right where they were when it first crashed 23, 25 years ago. And then came the foreclosures, because people could not afford to pay their taxes, ladies and gentlemen. People that had houses on a mortgage, most of them lost their houses. But even people that had houses that were paid for in full, a lot of them couldn't afford to pay taxes because they had no way of accumulating the money. For those of you that don't know, the Great Depression was a deflationary depression. That's why banks, central banks, are so afraid of deflation, because deflation, in a way, is worse than inflation. But usually a crash will start with deflation and then will be followed by inflation, or sometimes hyperinflation. So whenever a home that was backlogged on taxes for $500 or more, it was taken away from the families or the owner, supposed owner, and it was auctioned off, usually for $50 or $25 per piece. In June of 1931, stocks continued to go lower and lower, and dividends were being slashed left and right. For over a year now, people have been buying stocks at what they think are bargain prices. These prices are much below 1929, but there is no way to tell if they have reached a bottom. And unfortunately, they will go on to find out that they did not reach a bottom, and many people lost everything because they kept buying. Now, I understand, ladies and gentlemen, that we do have traders. There's people that make a lot of money trading. That's what they do for a living. But they are day traders or swing traders. And they are usually very close to the exit of a stock or a share of a stock that they have purchased. So they know what they're doing. But for the long-term investor, in my opinion, the stock market is the last thing you want to do. Because first of all, you don't know what's going to happen, right? You don't know how long it's going to take for a crash to play itself through and for the stock market to go back up to where it was before, even with the manipulation that's going on right now. And he goes on to say that many magazines and newspapers were telling people to just go ahead and buy more stocks at these low prices, to buy more houses, buy more real estate, that these are all bargain prices. But the problem at that time was, when there were bargain prices, is that the banks weren't lending. There wasn't enough money to go around, so the banks weren't lending, and people surely weren't borrowing because they really didn't have the credit. They had already lost everything. Ladies and gentlemen, I'm going to try to keep these videos a little bit short because there's going to be several of them, right? I said I'm only going to go through about 10 or 20 pages at a time. That way we don't make the videos too long. So let me go ahead and share with you some of the similarities that I saw just in those first few pages that we reviewed to what's happening now, today, in the present. All right, the housing boom, right? Right now, we are in a housing boom, believe it or not, as far as the prices of houses that are going on. And I just wanted to give you a little bit of perspective. Since 2010 to present, housing starts have gone up by roughly 30%. Okay? Now listen to this. Median home price in 2010 was $182,768. That was the median home price of a home in the U.S. in 2010. Today, in 2020, the median home price is $273,633, which is a 33% increase. So housing starts have gone up by 30% in 2020 compared to 2010. And right now, the price of the median size home in the U.S. is about 33% more than what it was in 2010. Right now, debt is going through the roof on a personal level. Not counting anything else, just credit card debt for U.S. citizens right now is more than $1 trillion. In the U.S., there's more than $1 trillion worth of credit card debt. And I believe that number was as of September, because I think they do it quarterly, and I'm not sure that they have released the last quarter of the year yet. So that's another similarity to back then. A lot of people were overburdened with debt. The stock market valuations are going through the roof right now, all right, compared to the price to earning ratio. For example, the P ratio, all right, for Tesla, you're not going to believe this, but the PE ratio, the price to earning ratio for Tesla is 1012, right? That's the worst PE ratio that I think exists right now, is 1012. The PE ratio for Amazon is 95. And that's the next lowest one I could find. But if you remember the gentleman, Mr. Roth, saying in his book that during the 1929s, the PE ratios were 20, 30, 40. And right now we have one company that has a PE ratio of over 1,000, and Amazon, another company that has a PE ratio of over 90. And the average PE ratio that people like to look for whenever they're looking at stocks, from my experience, is anywhere between 20 to 30. The lower the better, because the lower means the more profitable that the company is and that they don't have that many shares of their stock out on the market. So the lower the better. But around 20 to 30 is what people usually look for and consider to be somewhat acceptable. All right, ladies and gentlemen, so that's going to be it for this episode. This is going to be the part number 1 of this series. And I'm going to go ahead and continue to read the book, take notes, and then do some more parts. It'll probably be about a 10-part series by the time that we're through the book. But I hope that you got something out of this, and I hope that you can see that when you learn about history, when you study history, you can compare what happened then to what's happening now. And guess what, ladies and gentlemen? We are all humans. So usually we all make the same mistakes that the previous generations made. So that's why it's so important to study history. That way you can see what not to do. Having said that, I hope you all have a good day. Remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. I'm the Alaska Prepper. I'm out.